Welcome to Vol Stars, where we talk everything markets and those who make them. Today's episode brought to you by the Amazon Ring. Remember a time when someone ringing your doorbell was exciting and not anxiety inducing? Before capitalism turned your doorbell into another extension of the spam economy? Neither can we, which is why we are introducing our latest foray into the AI powered oligarchic techno state complex. Not only will your ring spy on you, but it will create a decentralized network of eyes watching every move in every neighborhood. Scary, right? Don't worry, we're just going to track dogs. We have found roughly 100 lost dogs in 100 days using the Ring surveillance state. Yes, we actually want you to believe that a $1 trillion company is buying Super Bowl ads to save 100 dogs. Think about it this way. Do you think Pam Bondi and the Department of Justice will look out for you and not the cabal of billionaire pedophiles while the Dow is over 50,000? You need us. The enemy of your enemy is your friend. You need to buy our ring to save your children's rings from the billionaire pedophile rings that the government's inner ring is protecting. Amazon Ring, the one ring to rule them all. And finally, by GammaStrike.com, providing actionable real-time data for every type of trader. You've tried the rest, and I'll try the best. GammaStrike.com. I'm Jay Fresh, and I'm joined by our co-hosts, Gherkin and Dork. Let's get into the market overview. There's lots going on. Lots of narratives.
Yeah, we could talk about the markets this week. We had pretty broad sell-offs in a lot of the indexes. So the market's being sad. After mostly a week of flat, it then became sadder.
Here's the thing though, Girk. Why is the market being sad? Because everybody's got their own reason, and the narratives are flying.
Well, I know that there's been quite a lot of banter about the U.S. job numbers not being in line with any predictive models, and possibly being I don't know. I don't want to use strong words, so maybe I'll just say like fraudulent.
Well, I mean, we could go a little bit more into that because I think that underneath all of this market selling, which has its own, narratives for different types of stocks, and I do want to get into that discussion here in a little bit. There is this sort of bigger backdrop of how healthy is the U.S. economy in general, and then the January jobs report comes out, and the number is quite good. Well, quite good in this new paradigm where somehow 20 to 40,000 jobs per month is full employment because we're eliminating all of the people in our country, which is somehow a good thing for jobs. I still haven't quite circled the square on that argument. But anyway, so the number came in, I think it was around what, 120,000, 130,000.
Mm.
I can't remember if that includes or excludes the government jobs, because I know the government shed around 40 something thousand jobs because the like voluntary leave was, I think that's a big part of that's being processed or was processed in January. But regardless, if you go and look back at the unmassaged data, there's always a like this huge drop in the unadjusted numbers in January. And that is because all the seasonal hires from the Christmas season get let go or move on, right?
Yeah.
And so you have this it's just a statistics and like a data management issue, right? I mean, they really really want to be able to assess the current state of the job market today, right, this month, but they have this huge seasonal variation that in many cases can exceed the signal. And so they have to adjust it if they want to have any hope of estimating, what actually is happening, longer term trend in the market, or in the job market. And so what they do is they say, okay, well, I can smooth this out and try to back out the seasonality based on what's happened in the past, right? So, okay, if the job numbers are traditionally, if you drop around 150,000 jobs in every January in the past few years, then we can just add that back up, right? And then we can look at the longer term trend because we've denoised this seasonal variation. But there's a twist here in that, so in addition to making that adjustment, which they made, which then makes it positive, and that's fine. I think we all can agree that that's better than nothing, and it seems reasonable. But they also have to add in the birth death model, right? Because they are getting information, they're sampling, right? So they're not waiting for tax data and things like that to come through. They're sampling a large subset of businesses, and then they're extrapolating that to the entire economy. And so to do that, they have to know how many businesses exist, and they don't actually know how many businesses exist because there's always businesses dying and being birthed. And so they take this birth death model and then they add that in as well. And I've heard that they assumed an acceleration in the birth rate, which helped them get a little bit more of a boost for, above the seasonality change for January. So yeah, so then you get this like 130,000 when really we just lost a shitload of jobs from seasonality, and we don't really know whether it was high or low or kind of the same. So everybody's trying to figure out, is this a good report? Is this a bad report? Were the assumptions good? Were the assumptions bad? Do I believe them? Are they manipulated? And I think the answer is that nobody feels terribly confident about this print.
I mean, I think just nobody feels terribly confident in general. I think
Yeah.
the print is
Yeah.
just part of that, but I think that I mean, if you just look at the market action, if you look at, leverage on the options macro page of GammaStrike.com, you'll notice that options
Shill.
macro well, it's an important metric. I mean, leverage is nowhere near its peak from 2024 when we were just at absolute inane levels of AI hype. Right. We aren't near there, and we haven't recovered since Liberation Day. Really, we did a small recovery, but even that is decaying. Right. So I think that what's being it's a reflection of a longer term trend that we're just not feeling so hot about the amount of risk that's packed into this. At least the decisions of this administration fiscally, I mean, our deficits are still just rocketing up. So, it's not exactly like we're over here speed running getting our house in order. And I think the market is at its performance, at least over the last couple months, even has just been a reflection of that lack of confidence.
Yeah, and I wanna, I mentioned a second ago with the jobs reports and things that, these are survey-based things. Um, so there's 2 primary surveys that people use for things like unemployment, how many jobs were created. One is the household survey, where they survey households, make kind of self-explanatory, and then one is the business survey. The household survey is the smallest. The business survey is larger, but still, there's sampling error involved there. The gold standard is the tax data. The problem is that that's delayed by 6 to 12 months. Usually, around 9 months is the delay on that data. So if you're trying to make timely decisions on should I cut interest rates, this if you're making a month by month decision, obviously it's not very useful data to try to convince people that I can make monthly decisions off of it. Um, and I wanted to post this in the chat so that we can put this on the video, so we can timestamp this. It is the survey response rates to the survey I just mentioned and a variety of other surveys, from the Bureau of Labor Statistics, and it shows that pretty much all of the surveys, even the ones that have very high response rates, have been going down, and some of them have been plummeting quite dramatically. Like we're talking going from within the span of a decade, going from a 70% response rate to a 30% response rate. And a lot of that happened starting around COVID. And so if you are trying to do long-term trend analysis, right? Even if you have a bias, you don't know what the absolute number is month to month. You can still look at trends if your surveys are the same month to month. But because the surveys are changing, we don't even know how much we can rely on trends. We don't even know how robust this is to even compare it to the past, right? And so we really are flying sort of blind. And I think that this increased uncertainty that is not being explicitly talked about by any of these agencies or any of the people in charge that are making decisions based on this data is increasing everybody's sort of indigestion about how much to trust this data.
Yeah, I
I
mean,
don't,
oh, sorry, I
yeah,
was going to
go ahead.
follow up on that. Yeah, I mean, like if you look at the 2025, jobs narrative, 898,000 jobs were erased through the benchmark revision. And so total job creation went from 584,000 to 181,000. Um, and so average monthly gains in jobs went from 49,000 to 15,000. 4 of those months were negative. So basically, the economy didn't create any employment for all of 2025. And then this is the second year in a row where we've had massive negative revisions to the prior jobs numbers. And you're correct, right? You're getting this data leading on the idea that these surveys will be filled out over time, and as the data from the surveys becomes available or more complete, you're going to get a better picture with the revisions to that jobs data. But I mean, I think every analyst on a macro desk right now is sitting around thinking, this is blatant systematic bias in the measurement of this data, but that is consistently making the jobs market and the economy look significantly more stable than it is.
Like,
And
are you
so
suggesting that like it's like almost like a implicit survivorship bias based on who is the one responding to these surveys?
Well, yeah, I mean that's part of the question, right? Is if you have a change in the probability of someone who doesn't have a job responding to the survey, then your sampling error no longer trends, right? Even if there was already a bias there, right, where you were always over or under counting, um, you know, there will be a step change that you will just miss.
I mean, yeah, I mean, and even if we just look at like the month over month stuff, there's like a 1% increase in um black employment. And like if you look at the demographic employment figures, unemployment for Black Americans went down like a full percentage point, and that would be a really substantial economic shift. And so what I think you're really seeing in a lot of this report is you're seeing incomplete data filled in beneficially
Yeah.
over and over and overlapping, because that's really there's only really three possible reasons that would have happened, right? Like, you have bad December data, you have bad Jan data, or you have a massive shift in the economy that no one's otherwise noticed. And so it seems like it seems like the real report should be that the US economy created no jobs or virtually no jobs in 2025, and previous data was overstated by 898,000 jobs. And the gains in January are primarily being driven by some reported healthcare jobs.
But Girk, what if this time is different?
I don't think it is.
Okay. Yeah, so one thing I would like to put in here also for the video version of this is this is also data from the Bureau of Labor Statistics, and this is the quarterly census of employment and wages. So this is a quarterly census data that's filled in largely by tax data, and it covers like 99% of businesses. But it's super lagged. So right now they just have preliminary numbers for the first half of 2025. But what it showed is that since basically, let's see, you started seeing a marked decrease in May of 2022. We started going down in our employment growth rate from about 5% down to the end of that year to 2.8%. Then we went down to the end of 2023 to 1.6%. Then we went to the down at the end of 2024 to 0.9%. And now halfway through 2025, the preliminary data on this says that the June month was growing at a yearly rate of 0.3%, and it was still declining. And so there was very likely, notable job losses in 2025. But this sort of corroborates the data that Kirk just talked about, where there's a little bit of employment growth maybe at the beginning. There's probably less at the end, or maybe even negative at the end. Probably going to come out to about zero for 2025. So that's kind of the backdrop that we're in.
Yeah, which really, I mean, if you think about the behavior of investors over the last year and the trajectory that the market and economic narratives have been on, this is obviously not congruent with that, currently held belief system. um and I mean, not only does it highlight possibly the need for more Fed cuts, except now that narrative shifts as well, right? Because now it's no longer the Fed is cutting to stimulate an already growing economy. Now it's the Fed is cutting to stabilize a possibly unstable economy. And that's a very different narrative for Fed cuts than what we experienced in 2025. And that's a very different narrative for equities, and it's a very different narrative for bond markets. And I think that really leads to some discussion about where we're seeing the dollar headed currently, which is down. And this is widely held. The expectation of every central bank in the world is that the dollar is going to come down, and we've talked about that relationship with precious metals several weeks in a row on here, as precious metals have run and run to new all-time highs. But now we're seeing the other side of that coin in the recent tech sell-off, and that earnings, were, like we said, in advance of earnings, really, cash flows are getting battered by capex, and these balance sheets are no longer looking nearly as good as they were 2024, 2025, when everything was just being projected out, and now the realization of that spending is starting to come home to roost. And negating the free cash flows from these companies that were previously issuing massive share buybacks in line with their potential revenue growth, and now are seeing those buybacks dry up. That buying at corporate buying at VWAP is just not happening at the rate that it was, and even in the beginning of 2024. And so those positive flows into the market are getting kneecapped. And then, and it's also coming alongside debt issuance, which, systematically drives shorts into these stocks. And then, and then the dollar decline is going to even more dramatically affect revenues of these corporations. So, those revenue to cash flow ratios where they're sitting now, as the dollar declines, that's going to get even worse, because now that cash flow doesn't have the buying power that it did, and those revenues are smaller than they were as foreign currencies rise in value relative to the dollar. And many of these corporations, Nvidia, Apple, they're making 50+% of their total revenues in non-US, in non-dollar denominated regions, right? So, they're making that money in China, they're making that money in Japan, and when you're a US corporation, converting that money back to the dollar, when that is no longer as profitable, right? The dollar has fallen against the currency where you're making your money, then that exchange rate is no longer in your favor. And so for a while now, the strong dollar has made sure that that exchange rate was very favorable for these, multinational corporations. But as the dollar declines, that exchange rate becomes less and less favorable, which means their debt is going to cost more and more money. Their cash flows are going to have less and less purchasing power, and their revenues are going to decline overall. And that is a very, like, real mechanical effect of everything we've kind of been talking about over the last, well, since we started doing this on here. And I think it's pretty important that we kind of highlight how all of those things link together, and why one thing is driving that sell off in the other.
Yeah, I think that's right. Everything is connected. There's a lot of people that are trying to look for reasons behind these sell-offs, and I don't think there's a single reason. I think a big narrative that people have been talking about for the last few weeks now is this idea that you know that AI, computer coding, and I guess Anthropic came out with something called Cowork, which will delete folders off your desktop or something. But somehow these products are going to replace software as a service, and so that has led to a big sell-off in software as a service. I don't know that the timing really works. I mean, I feel like they've been a little weaker for a little longer. Um, and it's actually kind of interesting because the people, a lot of those stocks that people are saying are being sold off because AI is going to replace them. It was not that long ago where a lot of these stocks were darlings of the AI movement because they all had an AI strategy. And so they had gotten bid up dramatically in anticipation of, this AI. I mean, a great example is Adobe. I don't know if anybody has actually used the Adobe AI features. I have tried a few of them, and they are, even by like AI standards, they're pretty awful.
Yeah, they're terrible.
Um, but nevertheless, I mean, most people don't know that. All most investors know is Adobe is an AI company now, right? And they have AI in their software. And I mean, Adobe got bid up hard, and now it's been coming down, but it's been coming down for a really long time. And so I'm not really sure that people are actually just selling off all of these things because AI is going to destroy SaaS for some reason in the next week. And then you have all the other things that are just like selling off. I mean, people are kind of documenting that the number of stocks that have sold off more than like 8 or 10% in the last, like, this year, um, is quite rare, right? And so, in a lot of them, it's really hard to make a connection between AI destroying it and the stock going down, right? Some of them have very little connection to it. So, I think that it's just an overall weakness, right? That has kind of been accentuated. We talked a lot about the jobs report. We haven't talked as much about CPI. We can talk about it if we want. Um,
I mean, if everything else holds true and the dollar continues to decline, but the cost of goods remains the same, then inflation goes up. I think that maybe that's the most surprising thing about these inline CPI numbers is that the dollar is down from the last report, and yet CPI is flat, also slightly down. That hmm. Yeah, I'm really not entirely trusting anything coming out of BLS right now. Um, I feel like the increases in prices that we're seeing in the ISM reports are far more in line with what we are seeing, at the checkout, what we're seeing at the gas pump, what we're experiencing every day than anything coming out of the BLS right now.
Yeah, I think what one thing that was really interesting to me was I can't remember whoever makes Doritos or
Frito
one of
Lay,
those. It was either Frito Lay or Pepsi or like somebody in the consumer junk food segment
Procter and
who
Gamble.
I think they make don't they primarily
Unilever?
make the stuff at the store that you don't put in your mouth?
I thought they made
I don't know.
Pringles.
Oh, maybe they do. Yeah, anyway, they actually, it's definitely yeah, Frito-Lay is owned by Pepsi, that makes sense because I was like, "It's Pepsi." Yeah, okay. Yeah, so they actually said that they are going to try to drop prices on some of their items because up until now, volumes have been going down and they've been replaced and this is true for a lot of consumer good companies. They've been replacing that drop in volume by increasing prices. But now they're finally getting to that point where they feel that they can no longer raise prices. So I think they're afraid that volume decline is going to accelerate downwards and they're trying to just stop the bleeding and the reduction in consumption by actually trying to drop prices. But at the same time, if you look at the PPI numbers, those are insanely high, right? And I think it's been a clear narrative up until this point that a lot of these companies have been eating the rise in prices because they're again, this is transience 2.0, but now the transience is believed and hoped on by these companies who are saying um, you know, well, the price will come back down once the tariff thing fixes itself magically. So if we just eat these costs temporarily, we'll maintain market share and maintain brand loyalty and we'll all get through it. And they're starting to feel that pinch where they're saying, not only are my margins getting squeezed hard by these rising prices that I'm not passing on to my consumers, but my consumers still aren't buying more.
I think I think
And
I think the I think that's not even true. I think we're just seeing consumers pay those markups, but CPI is just not reporting the pass through.
I think it's a mixture.
Okay, I could agree with that. That's a more reasonable take than my full blown conspiracy.
Yeah, I
Um,
mean, that's the thing is that
I
this is really hard when you have a million variables that could describe a really noisy signal. What hope do you have, right? And all these narratives are going to arise and you have to try to evaluate what is the rigor with which that analysis matches reality. And I don't know that anybody can actually say that they know for certain why anything is the way it is right now.
That's why I always that's actually the exact reason I always kind of try to drill down to the systematic effects of macro, conditions, because I think if you can get down to the base level data, just the raw data, you can actually get a far better idea of the trends than if you just look at, you know, the CPI report. If you're looking at, the raw values seen in, ISM reports or S&P PMIs, or, you're looking at the export import costs that are coming into, what's going out and coming into US ports and what's it costing US consumers, whether they be producers or, everyday people. I think you can get a much better idea of where inflation is, where it's headed, what effects that's going to have, regardless of whether, we're getting accurate data from these BLS surveys, or if that data is being reported accurately, or if that data is being reported with or without, a very positive bias. You can kind of ignore all of that noise, a lot of that noise at least, and really drill down to what is happening and why is it happening, and I feel like you even get a more recent or near term picture of that information when you do that. When you look at better data sets, broader data sets, and more timely reported data sets. So it's really just picking and choosing the basket of data that you look at versus picking the basket of data that the market wants to look at.
Yeah, another thing I'll add to that is that the more data that you look at, the more you can try to, as a scientist, this is always how my brain works. The more you can try to disprove certain narratives, right? So, like, I go back to this narrative of, well, PepsiCo's saying that people are buying less, and that buying might be that reduction might be accelerating. Well, okay, if I go look at per capita PCE, right, the consumer is still spending on the order of like 4.7 increase in spending per year. But if they're buying less and spending more, how could it possibly be that CPI is significantly lower than per capita PCE?
Yeah,
Right? And so that is a chink in the narrative that CPI is coming down in line when the other data is telling me consumers are spending more and buying less.
that's with a K, by the way, for any viewers listening in. Always dangerous to use that exact phrase. But yes,
Wait, what did I say?
don't worry about it. Let's not revisit it more than we need to. Um,
Oh God.
no,
Ron's got his
it's.
work cut out for him.
I was gonna actually say I went down a little rabbit hole here on P&G, because they used to make Pringles and Jif and Crisco and Folgers coffee and Iams pet food, but they've literally sold off all of those products. However, something very interesting is that P&G Chemicals produces oleochemicals, which are the fatty acids and esters used to emulsify and process food.
The things that give you diarrhea.
Yes.
Yes.
And I want to go dig into P&G's junk, like basically how much junk food additive are they selling in this GLP-1 world?
Yeah,
How many
that's not a
poor
bad idea.
Americans are still eating crap food, basically?
Yeah.
I mean, that could be it. That could be again, yeah, that could be one good indicator. Whatever happened to well, there was some discussion about SNAP no longer applying to junk food. Did that ever go through?
I
That
don't
could
know.
be a
Was it
factor as
like in a
well.
like it was either something Trump said in a speech or it's like a executive order which doesn't carry the weight of law or it's a bill they're trying to pass in Congress, but who
Something
the
we'd have to look
fuck
into.
knows?
That's not
Yeah.
gonna that's not gonna happen, dude. Those companies lobby so hard to make sure that they can get subsidized to make people fat. Like, there's no way that that's ever gonna pass.
Yeah, I don't although, if there was something like that that had occurred that could cap the impact of a junk food company saying that demand is going down. GLP-1 is another, yeah, I mean, it's another compounding factor that or confounding factor that could also explain why particularly junk food is seeing a decline in volumes. Um, that being said, what are we replacing it with? What are we buying more of? Right? Because we're
You're not
spending a
but
lot.
GLP-1. I
Yeah,
the
GLP-1. That's
But
I mean,
GLP-1s are like free now.
so
no,
like,
no, they're still expensive. I mean,
yeah, depending
someone's
on how
paying
fat
the
you are.
markup.
If you're not that
They
fat, it's
should
pretty
be cheap
expensive. If you're
because
super
they're
fat, then
amino
it's pretty cheap.
acids, but they're not cheap. The markup on them is insane. I think they cost nothing to produce. But then again, how many people are on them, right? Is it covered by Medicare? Not really. It's usually not covered for weight loss, only for diabetes. So, the people that are using it, like me and you, for, just looking hotter.
And by you, he means Girk and Dork.
No, I meant you.
Yeah. Oh, Ron's on it?
Okay, so this disconnect between personal consumption expenditures and consumer price index. I mean, there's plenty of explanations for it. I think that part of it does have to do with shifting consumer preferences. The weirdest thing to me though is that we haven't even really seen the increased costs for computer components and CPI yet. I guess another quarter and then we'll see it, but I think that what we're really looking at is a story of consumer demand elasticity, right? Even in the GLP-1 story, right? It just goes to show that this junk food stuff, I mean, all this research and stuff into how addictive it is, yes. But then, like, at the same time, once there's no desire for it, it's gone. It's not like they're just going to keep buying Oreos and throwing them in the shelf and then throwing them away at the end of the week.
That's not true. Actually, I go to Costco and I buy all the same crap that I bought before, but now I just stare at it instead of eating it.
Yeah, and then eventually it gets thrown away when it goes bad, yeah.
Yeah.
My fridge is still full, and I just throw more of it away.
Is that a weird cuckold thing?
No, I think it's just...
It's food security, Dork. I know you don't know what that is, but...
I just eat the food that I get. I think that some discerning consumers are probably also wondering the same reason why they spend the same on groceries.
That's probably causing you a huge amount of undue stress, the fact that every time you walk up to your refrigerator, there's no food in it.
No, it's not every time. It's just when I'm getting closer to grocery time and there's a lot less food in there.
Yeah, it gets a little harder when you have a bunch of kids that you can't really plan for because they're all...
Have you started injecting your children with GLP-1s yet?
Yeah, I was
you
about to say, just start...
should get them started early.
Yeah.
And imagine how much money you would save on food.
They don't need it. They need...
Never mind, they'll grow up to be like 5 feet tall.
They need to focus more on nutrition than calorie totals.
This goes back to my idea for all of the internment camps that ICE is building around the country. We should be providing prisoners as just economically. I know this is evil, but if we gave everyone GLP-1s, then we would have to feed them less.
It's true.
Maybe we can solve world hunger by solving hunger.
It will also make them more physically productive in the sense that they are more capable because they're not carrying all that dead weight around. And it could also help with, their mental health and their mental self-image. And, if we're actually trying to turn these people's lives around a little bit, get them back on the right track. I know that's not really what we do.
That's not the American penal system.
Don't worry, we're still keeping them in tiny boxes. Okay?
The American penal system is punitive. It's not reformatory.
I know.
It's purely a show so that other people feel good that we've punished someone.
Right. I mean, if we were going to sell it to the government, we'd talk about how much money they would save. We wouldn't tell them all of the personal benefits to society and to the people that might get reformed from that.
No,
change.
they don't. But they also don't care about saving money. That's the part where you guys are wrong, though. They don't care about saving money when it comes to imprisoning people.
You can't. Well,
if they wanted to save money, they would imprison less people. That's how you save money.
Actually. Well, no. What about for-profit prisons? Like they're making
that's
what profit.
I mean. I was going to say the politicians that own stock in all the for-profit prison companies. That's not going to be good for them.
That's true. I forgot about that.
What is this idealized world you live in where you can vote third party and prisons don't turn a profit, Dork?
I didn't realize that prisons were meant to be a profitable industry.
Okay,
My
so
bad.
one more thing
They
I want to
weren't
talk
meant
about.
to be, but they have become.
I'm going to try to get us back on track because as much as we've done a lot of polling with our viewers, and we know that there's a big overlap between macro analysis and for-profit prison balance sheets. Well, we're gonna
yes.
The focus groups really played well in that area.
It was the weirdest thing. Before we go into more of the earnings, I would like to circle back on what Dork said about the data from GammaStrike.com and the macro data there, and talking about the leverage that's being taken in the market. How many open contracts are there on the market and what are they worth? We really are seeing, this long-term trend from the middle of 2024, when everybody was all in on AI hype and infinite growth and maximum speculation, and they were all positioning in what could be described as fully degenerate positioning, um, both in leverage and both in dollar amounts of contracts and leverage on those contracts. But now the leverage on those contracts is coming down, whereas the total dollar amount still hasn't quite cracked yet. And so that's, I think, why we're in this region where everybody's just kind of now, no, it's not all full blown AI speculation. Now everybody's starting to see all this weakness. They've already made a bunch of money off of their degenerate AI plays, and they're looking at all the debt that's being issued. They're looking at the fact that most of the companies that are claiming that they're reducing their labor force is because of AI aren't seeing growths in profit margins, which you would expect if it was actually being driven by AI and not the result of a drop in profit margins, which they're trying to maintain because there is no enhanced productivity to be seen. And so I think people are kind of starting to put this together. And as a bunch of people start to fall off of this extreme speculative growth trajectory of AI, the people that are still on that path are getting increasingly more hyperbolic in their claims as they get desperate to maintain, that zeitgeist where everybody has to believe that we're all going to go up together, because we all kind of know that this is a momentum trade. And momentum needs people. And as people start to fall off and people start to lose that narrative, the people that are still on, it's like diamond hands, right? But for boomers, I don't know what term you would use for it, but so that's kind of where we're at. But
I would call it not in charge of their own investment decisions.
Yes.
Yeah.
Okay.
Custodianship.
Yeah.
Terminal custodianship, that's what we'll call it.
I mean, the
Yeah.
vast majority of the class of people you're referring to are, working with some type of asset manager, probably a financial planner. Ugh. Which is, a low bar. If you think nurses only have to go to community college, wait till you find out about FPs.
Are financial planners like wedding planners?
Kind of, yeah. Yeah. They're
But
given
for the end of
Risky,
your life.
bonds safe, and then you
They're
just explain that to your
they're
customers and buy
basically
stock.
they're basically like used car salespeople, except they never have to show you the thing they're buying.
Oh, that's cool.
Yeah.
Yeah.
But they'll tell you that 9% for 72 months is great.
Ooh, gross. Yeah,
That
I
was
can't believe
that
people
was
are
a
paying
dig.
that.
That was a dig at auto loans. They're insane right now.
Yeah. Well, so are delinquencies in auto loans too.
Yeah, well, because
It's
they're
higher than 2008 now,
because
right?
imagine buying, a Chevy Equinox for, $38,000, but having a $700 a month payment on it
Yeah. And Ron,
for 6 years.
we will transition, I promise you. Stop it. But I would like to finish my thought on the options
Options
data,
macro.
the option macro. So we are seeing we're seeing this sort of indigestion show up there that we're seeing in other places in the market. But nobody's closing positions. Nobody's taking actual money off of the table. They might be changing their leverage profile, and they might be more scared of the downside, but they're not taking money off the table. And so that kind of is one of the primary reasons why we are seeing increased volatility, or I guess we'll just call it wild sideways price action. violent
I would
chop.
actually argue that people are taking money off the table. There's just such an enormous amount of it that the systematic deleveraging of that positioning takes a very long time. There was
My
something Wyckoff really nailed about the psychology of institutional investors, and that's that when markets are flat, they're selling. They're either selling or buying, right? You're either accumulating or you're just it's distributive. And if it is flat, it is distributive at a high. And this is how institutional investors get out of their positions. This is how they risk off very slowly in a very measured way. And the fact that the index has been fairly flat since October, I think, indicates that that's exactly what we're seeing.
Yeah, no, I don't disagree. And well, what I was going to say was, the options market, it's not super clear that there's been much de-risking at all there. But what I think is probably happening is people are selling shares underneath all of that options positioning. And you're getting, you have so much intraday trading on zero DTEs and things like that, that it's masking a lot of that. It's turning that selling into volatility.
I think
And
I think
volatility masks trends for a
and
while.
that was like my big prediction for 2026 is that we would see more volatility. And I also think, part of that's mechanical, right? If
Yeah.
you're selling out shares, your positions become less stable because they become smaller, which raises the price of insurance on those positions,
Yeah.
which
Yeah.
is
And
options,
and
right? So if we're actually seeing what I think we're seeing in the market, we're seeing deleveraging, then leverage should stay relatively flat, which is also what we're seeing.
yeah, so but the thing that was interesting to me, and this is kind of accelerated over just the last few weeks now, is pumps are reversing intraday. That
Mm.
usually doesn't happen, right? Because what everybody wants to happen when they're playing the intraday market is they want it to close flat because everybody's selling options on it to get cash flow. And inevitably, what would happen is that any sell off would cause everybody to just, pile all in on flat or up, right? You've got the people that are just always going to go long and buy the dip, and then you've got people that want to be flat. And so we always had this reversal intraday to at least flat, if not just more up. And the last week or two, right, we've had that it go down, and then you'd get people betting on flat or up from there, but then that would get crushed before the end of the day.
Yeah, I kind of talked about that over the last couple of weeks. We've been seeing like supportive gamma, so like the total market maker exposure to gex dwindling, right? As that gets thinner and thinner, the market maker, I guess I should explain for anybody new real quick. In a positive gamma environment, when the market maker is positively exposed to gamma, they will buy into the downtick. So when participants in the market sell, the market maker buys, which is very stabilizing. And as that gamma thins, the market maker buys less and less. And then if that gamma goes negative, something real fun happens. The market maker starts selling. And over the last like 3 weeks since earnings, we've been seeing the supportive gamma thinning, right? Which means that the market maker has been buying less and less of every dip. And as of the end of last week,
As of the end of last week,
as
what
of the
now,
end
Kirk?
of as at the end of last week, we saw that gamma move negative, and so now the is selling into falling prices, which is going to start to drive volatility up at a much faster rate.
Yeah. I mean, that's
Yeah,
where we're
and
kind of just kind of like dancing around the threshold of volatility for
some of us
sure.
are literally dancing. Okay.
Uh,
So, if taking all of this together, Anxiety is going up, desperation is going up, hype is going up, volatility in expectations is going up, volatility in data is going up, volatility up, 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 up.
Mm-hmm. More
And we're
uncertainty
already at
breeds
very high
fear.
valuations with volatility increasing in all aspects, both quantitative and qualitative. So I guess the question of the week is anything going to come out from either earnings or any upcoming data that could assuage that fear that's been slowly percolating, or is it going to exacerbate it, or is it going to have no effect? So maybe we'll start with earnings. Are there any earnings on the list next week that you think could move the narrative?
And the reason I wasn't pushing like Ron to move on to earnings is because my answer is no. I don't give a shit about any
Yeah.
of these. The only earnings that matters over the next 2 weeks is or
Is
3 weeks
Texas Roadhouse.
is Nvidia.
I mean, I'll be
and
looking at Klarna and Walmart for
Nvidia
sure, but
Nvidia is a close second. I'll
Do we
give you
want to
that.
look at DoorDash and see if middle income people are becoming more broke?
No, I thought the DoorDash test was if hot blondes are delivering your DoorDash, it's a recession.
that makes sense actually.
So hey,
Wait,
get out the company credit card. We have to do some market research this week.
Yeah, it's true. Now I'll be looking at Klarna. Klarna might be interesting. Walmart is a decent bellwether for the economy, so and
Yeah,
they should.
Walmart's the only one that I cared about. Yeah.
Well, yeah, they should. Well, they should. We should see them do pretty well.
Yeah.
So
And they have been, right? I mean, and even their stock is like insanely inflated right now.
yeah, that's just a further bellwether of people being more price sensitive instead of going to the local, expensive grocery store that's more convenient. They're going, they're driving the 30 minutes to go to Walmart to get their groceries because they're cheaper. So we should see more of that.
Oh, Medtronic got ordered to pay $382 million to a rival firm for violating antitrust laws recently.
Oh, we're doing that?
Yeah,
We're
and then
actually punishing people for antitrust?
there was a fun thing that I read about this week in the medical device space also, where they had used an AI assistant to determine the dosage adjustments of a implanted pain management device. The current warning from the parent company is don't get stressed, and your AI buddy won't overdose you with opiates.
Jesus Christ.
Oh, interesting.
Stay
Well, and I mean,
calm. Stay, it's going to kill you. Stay calm or else it'll kill
yeah.
you.
Yeah. Also, maybe carry Narcan.
Don't freak out.
You can buy it in some states at your local CVS. Save a life.
Ooh.
There's a
Yeah, so
place
I
nearby
guess
that actually has free Narcan, so I could just go stock up. But I don't have one of those devices, so I'm okay. I can
as
be as stressed as I
as
want.
It's
as
true.
far as like the AI stuff, the only things I really see that stand out a ton are Palo Alto and Cadence.
What about
I don't
Figma?
I
Figma
mean,
D's nuts.
yeah.
All of these earnings suck. None of them are Nvidia. I don't even know why we're talking about this.
Yeah, yeah. Maybe Palo Alto, but even then, it is so overshadowed by the mountain that is Nvidia. It's just off in the distance. Like,
I
yeah,
wonder
I
if
don't think anybody's
Carvana
gonna.
is going to release some more tranches of debt that they'll never pay back.
Yes, the answer
Hmm,
is always yes.
that's fun.
All
Yeah.
right. Well, I'm looking forward to seeing what Texas Roadhouse has to show.
They
All right.
offer a mediocre steak that's not the cut you ordered at a decent price.
Oh no, I would never eat there.
Really? I've eaten there. It's not
I've eaten there a
that
few
bad.
times.
Oh, okay.
The rolls are good. I just I don't There's nicer places I'd rather go to spend $30 on a steak or $40 on a steak.
You do live in Texas, the land of cheaper steaks.
It's kind of expensive though.
In New
I had
York,
a
it's like $180 for a fillet, or you could go to Texas Roadhouse and buy one for 30.
Oh wow, yeah, I would never pay 180.
But when
I had a
McDonald's is $30, Texas Roadhouse suddenly looks like not that bad.
It's true.
I had a chicken fried steak this week.
Oh,
Delicious. Haven't had one of those in
shit.
a long time.
Were you able to eat more than a quarter of it?
I ate it all. It was the only thing I ate that day though.
Do you ever find yourself feeling the compulsory need to walk after a meal because your meal makes you so nauseous?
It's not really nauseous if I eat too much. I just feel like I'm going to die and I want to go to bed.
This conversation brought to you by Eli Lilly, manufacturer of terzepatide.
Okay.
You guys are making me
Now-
really a big fan of this drug. Makes me want to try it just so I can feel like I'm gonna die or nauseous when I eat
It's
food.
not. It doesn't make you
Fun.
feel like you're gonna die. It makes you feel like. Let me put it this way. Have you ever had Korean barbecue?
Yes.
Imagine eating a handful of cashews, but feeling like you'd been at a Korean barbecue for 8 hours.
Yeah, so you'll try to eat like a normal, like you go to like, I don't know, Chipotle or something, you get a burrito. You eat that whole burrito, it's not going to be good.
You
not
will
gonna
turn
feel
into
great.
like a python after it's been fed a
Yeah,
rabbit.
you'll feel like you ate 4 burritos.
Yeah.
Okay, now it sounds like a money saving thing, so maybe I'm back
Yeah.
in.
So what
But,
happens? What happens is you take a bite of the burrito and then you wait like 4 minutes, and you're like, maybe I could venture another bite.
Perhaps
then you
pick the grains of rice out of it.
And then you do the second bite, and you still feel okay. And then you're like, you know what? I can't risk a third. And that's how you lose weight.
Well, no, you're just kind of like, I don't know, I'm just kind of done. I want to go do something else.
Yeah,
Whereas
it's almost
before
like
you're
lap
just
band surgery without the surgery.
Yeah.
That's pretty okay. Yeah, I know my parents are on the thing, and it basically just their portion size is just plummeted. You know, so makes sense.
Anyway, but yeah, as long as you don't quote unquote overeat, you feel fine.
Or ever stop taking it, because you will immediately gain all the weight back.
Yeah.
Mm.
So you have to
I
be able
see.
to afford your habit for life.
It's like Paxil.
Mm.
I don't remember
It's
what
like-
Paxil did,
it's
but
like-
yes.
It's
Paxil.
like
If you
heroin.
stop taking Paxil, you go nuts.
No, okay. Sure. Yeah.
It's an
Or like
antidepressant.
or what's the Eliquis, the heart medication that they put old people on and they can never stop taking it, or they'll just immediately have a heart attack.
Yeah.
Yeah.
Okay.
I feel like that was a Jason Statham movie at some point.
You talk about
Probably.
Crank. You know what's funny is
All
that
right.
movie's actually pretty good, but let's move on.
Yeah, but imagine if Jason Statham had a medical device that dispensed opioids via an AI assistant.
And he just spent 2 hours trying to stay calm. He's just like
Hot girl
petting
walks by,
kittens.
just overdoses, starts nodding off.
Okay, so nothing in the earnings, including Texas Roadhouse, is probably going to disrupt narrative trends that are occurring. What about the calendar?
Balance of trade is almost wait, no, that's Japan. Never mind.
That's Japan, yeah.
Building permits. Ooh, did I mention that last week's housing data was absolutely fucking atrocious?
You did
I want to
not,
talk
but
a
you did
little bit
know.
about that, actually.
I didn't.
it.
I mentioned it before the podcast started that it was not looking great.
It was down 11% month over month for existing home sales, which is the worst drop since the financial crisis in 2008. Maybe the worst drop in history. 11% fewer homes sold. And people are like, oh, it's the weather. And then I thought, if you're homeless and it's really cold, wouldn't that incentivize you to go house shopping? But yeah,
Well, I mean,
that is a really significant drop. And I think if we start to see building permits, housing starts, and new home sales fall in line with that as well, the narrative in real estate growth starts to fall apart. And that is literally the backbone of our entire economic structure. So remember that
Was
your
there an
house, I just want to say one thing before you interrupt me, because I know you
I'm
need to.
sorry.
One thing to all of you home sellers on Zillow who bought your $175,000 home in 2022 at 3.5% interest, it is not worth $450,000. I don't care what someone will buy it for. It's still worth 2% a year compounding since 2022. So about $190,000.
Well,
And
I'm going to share a
you're going to
chart.
realize that loss. And I'm really happy about it.
I'm going to share a chart too that kind of helps explain, I think, a little bit of this problem that we're having and why it is just a nobody's market in real estate. Um,
Dork,
oh, I
stop
put it
pretending
in the
you're
wrong
happy about
place.
this. You bought a home in 2023,
I did, and I bought it I bought it at an interest rate way below market.
but you
But
bought it at an
I bought
equity valuation way above market.
it's true. But
I
I also
I bought
made a
at
big
the
enough
end of
down payment that I
2020.
can refinance. So,
That's true.
I got in early on the wave. I bought in
so
2020.
well, so here I posted a chart in our chat, and I also this is what you're up against, right? As a housing market, you've got what is that? 2 decades straight of rates that were lower than they are now, just about. So everybody is still, and if you're talking about a 30-year mortgage rate, right? You're talking about people from 2010 all the way through to 2022, the start of 2022, just buying homes with dirt cheap, just unnaturally cheap interest rates. And then you're going and proposing to them that they move and increase their mortgage rate by, double. You're insane.
Quadruple in some
Yeah.
cases.
Yeah,
Yeah.
it's insane, and so the thought that people are gonna wanna be like, "Yeah, let's move around." No, because they can't just take their mortgage and push it onto another home, that's not how it works, at least not yet. Maybe that's the trick,
Yeah,
but, like
I have heard people in the current administration float ideas willy nilly that maybe you should be able to uh, sell your mortgage to somebody else to take over not just the home but the mortgage as well.
there's ways you can sell a house and have people assume your mortgage, but in terms of, like, if you wanna move, right, and you have a mortgage, that's a little because that doesn't help you, right? Like,
You're
you have
simply
to get
not
a
going to want
new
to
loan.
move.
Yeah,
Yeah.
exactly. They're just not gonna
Yeah.
move. They're not gonna sell their home, and people aren't gonna buy the homes when the prospect of a mortgage rate of 6%, and a monthly mortgage cost of $3,450 for a three-bedroom, home, often in a food desert. It just doesn't exactly make people water at the mouth to go buy a home,
Are
especially a
you
first-time
reading
home.
directly off of your mortgage paper right now?
It's got drool all over it, okay? I'm sorry. It's hard to read.
It's like three
Yeah.
bedroom in a food desert. Uh,
The current average home price, median sales price of homes in the US is $410,000. But current mortgage rates are 300% higher than they were 2 years ago. So
I
my
need to
yeah.
pull out my monthly
proposition is
payment
that the
chart.
average home price needs to fall by about 60%.
Yeah.
Yeah, keep in mind too that
So if you're
the
buying a house right now, remember it costs 60% more than it should.
yeah, also too, which is completely discounted from inflation and other things, which it used to not be, is property taxes, which have
Mm.
also, which are linked to the value of the property, right? Um, I say this all the time. The lower and middle incomes are required to mark to market the value of their assets every year. Only the rich can delay the mark to market of their assets. And it would be insane for us to force them to do so because that's what the poors do is mark to
Mhm.
market those suckers. Um,
Idiots.
but that but that like my property taxes, which are probably like 40%, if not more, of my total monthly bill on my mortgage, go up about 12% a year. So that's like 5 to 6% a year that I'm paying more for the same house and the same mortgage locked in. That's being completely discounted from, inflation because taxes are they
Well, that's
used to be
what's
included, but
interesting
they
is they actually do include some measure of that in the rental prices because landlords they are going to pass that inflation on to their lessees, lessors, one of those two,
Lessees.
um, lessees, yeah. And so there is some measure of that still floating around. How
It's a
accurately
second
it's
order thing,
measured, who
though.
knows? Yeah, it is.
Well, I wish I had my monthly payment chart just pulled up so I could show it, but I've posted it on Twitter and stuff. There's when you look at the average monthly payment of a home, um, it is like if you just got a median priced home at or an average median priced home at the average mortgage rate, your monthly payment went from, in 2022
And you make
something
the
or
median amount of income.
yeah, yeah. Well,
Yeah.
even just ignoring that, and going straight for the monthly payment, and you can do the math in your own locale. You're looking at something of an increase of it went from like 1650 or something like that at the beginning of 2022 all the way up to now like 2680 or some,
Yeah.
it was just a huge increase in the monthly payment. And that's what everyone's looking at. Everyone's talking about the mortgage rate and all that stuff, but people don't really give much of a shit about the mortgage rate. They give a shit what percent of their income is going to be used just to pay their fucking mortgage. And when it's pushing up on 60%, which is if you make an average income, it looks god awful to buy a house because that's you're paying more than half your wages, which that's even in terms of at least back in the day, they forced you to make at least 3 times your rent to be able to rent a place, so that way you could make your payments, and
They
that's
still
starting
do
to go out
that.
the window too. Do they?
Well, I don't know.
yeah, they still kind of do
In
that.
New
Yeah.
York City, you usually have to make like 8 to 10 times the monthly rental payment in income.
How does anybody actually live there?
I don't know. I mean, don't be poor.
Take over your
Yes.
great great grandma's lease in an old lead and radon ridden
That's
apartment.
the dream. Yeah, if you can lock in something that's like rent controlled or rent stabilized and just dose yourself with some toxins every once in a while. Yeah, that's those
All you have to do
the pre-war buildings with no like
is
6th floor walk up.
when
With
your grandmother dies, you don't tell anyone. You carefully remove her skin.
We're at over an hour in, so it's clear you like Vol Stars, and for that, we're thankful. Could you do us a huge favor though, and be sure to give this a like and subscribe if you haven't already? It really helps us to get the podcast out to others, so we appreciate it. Thank you. Well, hey there, stranger. If you're enjoying this podcast, be sure to check us out on our socials, where you can hear the latest about Vol Stars and GammaStrike. Check us out on X, Blue Sky, and Reddit.
Jesus Christ, we're such
Ugh,
shills, dude.
all right, and we're back. So, calendar, we talked about housing. A lot of the housing data that's coming out this week is delayed. It is November and December, but there are some housing data that, like we talked about before, that is more timely, and so I think housing will be interesting to look at. The other thing is really on. I mean, the only other thing that really sticks out is on Friday we have advanced GDP growth rate quarter over quarter for Q4, which I think a lot of people are watching with bated breath. Also, I think personal income and personal spending is kind of interesting because, last month the personal income was 0.3% month over month and personal spending was 0.5% month over month. And so if that's a trend that's going to keep continuing where spending is over income, I think that's something to worry about a little bit at least, or at least to keep an eye on. Core PCE price index for December is coming out as well. The PCE price index data. Again, I never really care a whole lot about that because by the time you get PPI and CPI, it's largely known. So the consensus is 0.4%, forecast is 0.2. Last month it was 0.2. It's probably going to come in somewhere in there based on what we already know. But I'm really interested in the growth rate quarter over quarter because we are starting to get to that point where is is the economy doing well on a quarter over quarter or year over year basis because of inflation or because of productivity? And how do you tell the difference? And right now, everybody's getting excited because the number is still up and productivity numbers are being proposed as up. And so that tells creates a narrative of AI and just technology in general, and just workers are magically more productive, right? We're getting all of these productivity enhancements, and so our economy is growing in a real sense. But you could also take a look at that number and say, well, if the GDP is growing by 4.4% every month, are we undercounting inflation? Because if it's not productivity, it's inflation.
So I think this kind of comes back to the joke, right? About the economist. Like there's two economists walking down the road. One of them sees a pile of shit, tells the other one, "Hey, I'll give you $50 to eat this pile of shit." And he's like, "Okay." So he eats the pile of shit, gets $50. They walk a little further down the road and they see a pile of shit. The economist that took the $50 is like, "Hey, I'll give you $50 to eat that pile of shit." He eats the pile of shit, and then they go on their merry way. And the guy goes, "Hey, wait a minute, no money really actually changed between hands here." And he's like, "Sure, but the GDP went up by $100." I think we're seeing a little bit of that going on here. Quite a bit of it,
Well, I
actually.
mean, I think certainly that is occurring. And if you go and look at any other time you start to slow down, one thing you see is productivity starts to go up as you are overestimating the strength of the quote unquote real economy because you're seeing an actual downturn, right? So some of that too. So for example, you could argue that there is a short-term boost to productivity simply because employees pay you for the work that you do now because it will generate future returns, right? And so there is a lag between when they fire employees and when those lack of that drop in employees gets worked forward into a drop in productivity. Your company can simply just do less work, right? You still have a period of time where you can sell the product of that labor, right? Like, okay, everybody, a bunch of people in software, for example, they finished coding the next big version of some software, then they get all these contracts written for a year of SaaS, and they lay all those people off, right? And so they reap the rewards of that labor for a year after they got rid of all those people, and that shows up as an increase in productivity when really it isn't. It's not real.
I mean, there's also the question of, the GDP calculation is consumption, government spending, investment, and net exports, right? It's just the sum of all those things, where net exports is exports minus imports. Um, it comes down to also, when we get that report, kind of trying to see which bucket, right? If it does end up going up even more, right? Seeing which bucket it comes from.
But
So,
I mean,
because
that's another area where that's a great point, like the net exports. That's another area where things can look like productivity when it really isn't durable increase in productivity, right? Oh, we're just gonna draw down our inventories to try to wait out all of these tariffs that are hopefully transitory, right? All of a sudden, our net exports go up.
yeah, and that's what we saw that. We saw that with we
Yeah,
saw that with
yeah.
Liberation Day and everything after that. It could be more of the same, right? In that sense. And I think that's where the interesting part's going to be. And that's partially also coming full circle too, about this whole confidence in the American exceptionalism narrative kind of faltering. It all comes together, right? We're all just kind of from business owners and people who are, net importers, distributors, manufacturers. Everybody's just kind of waiting around, unsure of any sort of direction, because right now we're in limbo, right? Even the tariffs themselves are in limbo, where they're going to be voted on uh, by Congress fairly soon, I think. Or did the Supreme Court kill their ability? Anyways, it's all in limbo. No one really knows, right? What is the end game, right? I mean, you hear the end game from the administration, but like, what is the actual? When are we going to get a trajectory from this where we can actually start to plan? It's very hard to plan.
Dork, in line with your economics joke, how many economists does it take to fill a cup of coffee?
How many?
None. If it needed filled, the market would have done it already.
So that's kind of my GDP GDP has been interesting and it'll continue to be interesting, but I mean, it all comes to we're pushing the limits of the elasticity of demand and supply. So
Well, the consensus estimate for GDP is that it's going to fall, and it's going to continue to fall throughout 2026. But I mean, what about FOMC? Do we give a shit about it? Does it matter?
Nobody gives a shit.
I actually don't think the Fed said anything or thinks anything
they have no credibility until the new Fed chair comes in.
that anyone cares about.
They have no credibility in general, but they have no credibility until the new Fed chair comes in.
They don't do anything, regardless of the Fed chair.
Yeah,
but in
so they're
terms
just going to continue to have no credibility.
I mean, I know spent a fair amount of time poo-pooing the GDP and the problems with the measurements, and especially extrapolating out what it means. But narrative is what's really important, or perception. So how do you think people would perceive a hot GDP? Will it matter? Right? Because I mean, CPI came in cool, and they tried to pump, and it fully reversed, right? And all of these pumps have been, there's kind of like all of the things that people used to correlate to like a pump seem to not really be manifesting the way that they used to.
The thing is, I think what's happening is we're getting a higher level of scrutiny in the data than the previous administration. The previous administration was afforded a lot more leniency in how things were going compared to this one, especially considering how much policy has changed and how much the cage has been shaken. So, I mean, if GDP continues at this hot rate, could probably be some pumps going on. But yeah, I think that as people dig in, depending on what ends up happening, but as people dig in, you'll start to see the actual continued volatility, just because they may not be so stoked with what's actually happening with GDP. You're not getting the I, you're not getting the C, you're getting the G and the net exports, right? Like, if we continue to see that, that's not exactly an indicator of economic strength. That's an indicator of shifting trends.
Jay Fresh, I'm only going on that subreddit if you're actively participating in it.
No.
Yeah.
For transparency purposes, he's talking about r/butt sharpies, everybody. So
why would you do that? Now we have to put explicit on this episode.
I thought we already had to. I'm pretty sure I said once.
Do not visit that subreddit at work or home.
It is exactly what you would expect it to be.
It is. It is, in fact, a competition between like-minded individuals.
Oh, good Lord.
Would you say that they're all trying to stretch themselves to achieve things that they didn't think they could?
They're definitely stretching themselves a bit too thin.
Jesus Christ. Okay. Hey, audience questions, guys. Let's I think we've beaten the
Dork. If I try to get you a date with an economist, I'll tell her you have an above average number of penises.
There you go. Perfect. Yeah. And my demand for love is inelastic.
You're only partially hedged against inflation.
Oh, she might leave. Yeah, I think we've beaten the calendar horse pretty dead.
Yep, let's get into audience questions. Let's wrap
do
it up.
So, in case you guys don't know, we post links in all of our podcast spots to go and pop in a little forum thing and say, hey, I have a question. We also go on social media, make little posts before we do these podcasts. You can go on there, ask questions if you want. We will get to them if they're, halfway decent. Even if they're not and they're entertaining, we'll go for it. So, yeah, ask away. So we have a few questions. First one comes from Blue Sky. The yen has been gaining against the dollar, but at a seemingly controlled rate. What is necessary for another shift in USD JPY? Is another Japanese rate hike needed? Or will the yen repatriation reach critical mass on its own from here? That's actually a pretty darn good question. I think that there's a lot of different factors that can cause yen to continue to strengthen. Everything from economic weakness in America all the way to the monetary policy of Japan. Since they're so closely intertwined, I mean, you can't really nail down an
You know, the
exact
thing
thing.
most likely to increase the yen is the
Tell me.
dollar going down.
Oh man. Yeah. And the dollar, why would the dollar go down? Now we already discussed it earlier in the podcast. There's a ton of stuff that can really kind of add together to make the dollar go down. And I think a lot of it is commitment to the techno dollar. So, anyways,
How dare you throw that in there?
I had to beat you to the punch.
Hmm.
Yeah. Anyways, yeah, there's.
Yeah, I
So
mean,
the world could make that happen.
demand for dollars is kind of going down a little
Yeah,
bit.
we talked about all the structural things with the dollar earlier in the episode, so I don't think we need to reiterate all of that. But I mean, I think those factors are likely to continue to weigh on the dollar and in turn increase the value of the yen.
Well, now that I said techno dollar, I have to kind of bring up a
No,
little bit
it's better if you just leave it and everyone's just like, what the hell is that?
Okay, I'll leave it with the techno dollar. Sounds good. Yeah.
Yeah.
Okay.
Well, okay. Like the only thing where there's demand for dollars is, building out AI data centers right now. I mean, otherwise, nobody wants the dollar.
And that's not even demand for dollars. That's actually demand for short dollars. It's demand to borrow dollars.
Yeah, but you need
It's
to
the tech
have
put.
dollars. You need to have dollars out and circulating, right? You need to acquire dollars.
You borrow them and then you just give them away.
But you want to wait till you can get cheaper dollars.
I mean, maybe not. Maybe you want to borrow the money and then wait, and then the dollar gets cheaper.
Or you
Relative to the
borrow
cost
a
of
bunch of
goods.
dollars and hope the dollar goes up at some point, and then the dollars that you pay on the dollars that that's just dog shit. There's
It's all dog shit.
yeah,
It's all dumb.
there's really no good ones.
The money goes in a
Yeah,
circle.
I mean, a lot of it too depends on like what the Japanese government's actually going to do on their end in terms of trying to do stimulus and things like that.
Yeah. I think that's
And
the
we
biggest first
also
order
can't
effect.
discount the fact that the Fed is now printing money again, even though nobody wants to call it money printing.
Hey, it's not QE. Calm down.
That's what they say.
Balance sheet rollover, JFresh.
It's classy.
That's why it's going up, because they're just rolling it over.
Because
classy.
there are time factors that are not being considered.
Okay.
Shut the fuck up, JFresh.
It's hard enough to analyze the shit without assuming crime.
The drones
It's
are
not
circling,
crime. It's money printing is legal.
I mean, it's not without a statement that they're doing it. They have to go, hey, we're going to do this. No, they didn't. They said we're going to roll over the excess from our mark-to-market assets or expiring assets every month. which is about
Yeah.
$40 billion.
They're rolling off the MBS that nobody's factoring in because they already bought those a long time ago, and those became dead money at that time, into new money, into new recurring debt.
Yes.
They said all that. That's money printing.
No, it's classier than that, Jay Fresh.
All right. That's
It's
what everybody
slightly,
keeps
it's
telling
slightly
me.
classier money printing. Have you considered that maybe the money printed is the $10 billion excess and the $90 billion gained over the last 3 months? And
Still
that the
classier.
80 billion is just the rollover.
Yeah, I think you have to discount MBS from the number.
Uh,
So I think once the Fed buys an MBS, it's dead money.
I still like it. I think it's
let's
classier.
roll the. All right, let's move on to the next question.
I would allow them if they sold MBS. I would allow that to be counted.
They don't do
But they're
that.
not selling it. They're
They
just
don't do
letting it
that.
expire. Right.
Yeah.
That's not something the Fed does.
If the
Diamond
Fed
hands.
starts selling shit, there's a problem.
There's a huge problem.
Yeah.
Oh yeah, I know.
There's like
And if they start buying shit, there's a huge problem too.
Yes, if they do anything, there's a huge problem. Okay, moving on. We got a question on YouTube. They're interested in hearing some discourse about how the options market is evolving around zero DTE single stock availability.
Well, hold
Well-
on. These aren't zero DTEs
Yeah.
on single stocks. These are 3 expirations per week, up from 1.
So
So
one
it's
DTE.
Yeah, so you get 1 DTE options on single stocks.
It's one
and-
DTE min
And
or
I
whatever.
mean,
or something.
that is likely to make the stocks that are already very liquid more liquid, and the stocks that are not remain on single expirations or monthly expirations.
I think it'll be interesting to see, because we noticed with zero DTE implementation on SPX, the amount of ultra short term hedging activity, we'll call it that, really ramped up, right, and proved to be really useful. I think we're going to see a lot of that
There's
on
a
the
big
single
difference.
names too.
I don't know about that. There's a big difference between the behavior of volatility in equities versus indexes.
Well, yeah, there's the European style versus American style. You got share settlement versus cash settlement. There's differences, but I think that even with those differences, for large enough institutions, those should be fairly minor, especially with the liquidity provided by ETF creation.
Yeah,
and
but
redemption cycles.
but on equities, instead of seeing the rampant put selling that we've seen on indexes since the advent of zero DTEs, you're more likely to see rampant call selling.
Oh, for part of the dispersion trade?
Yeah.
I mean, you're seeing a lot of call selling on
it's like the
indexes,
biggest
too.
options trade, largely.
Well, I think I don't doubt that. I just think that we're going to see just that same sort of compression towards the short end on that trade, right? Like,
So you think 2 years from now, we're going to be sitting here talking about how equities are flat and they just jump whenever they squeeze sold calls?
that's exactly right. I think that is a higher likelihood, or they'll just start rocketing. They'll rocket
Stair-step
into
value
earnings,
realization.
right? Heading into earnings,
yeah.
they're just going to start shooting up, and then just tank right after earnings. I think that's a very high
Substantially
likelihood.
increased quarterly volatility, which is already true.
I think, yeah,
It's gonna get worse,
It's hard.
yeah.
It's going to be hard to separate out how different these single stock options are going to be versus index, because the index is also changing right now.
Yeah.
We are going into a, higher put, like bought put valuation than we were, and we've been slowly moving that way, over the last, year and a half, just the steady decline in put selling overall, and now kind of a transition into put buying. I mean, the fact that VIX is now, like, even a suppressed VIX is like 17. That is a very different environment than it was in 2024, when a suppressed VIX was like 11.
Starting to look a lot more like 2021, 2022.
Yes, it looks a lot like that. Which it looked a lot like that at the beginning of 2025 as well. And yes, there was the tariff tantrum, but I don't know that wouldn't have happened anyway because of how people were positioning, right? There was quite a period after December 2024 OPEX where it was clear people weren't relevering into the long trade, right? They were repositioning around a fear of downside, and then the downside was realized, and then retail bought absolutely everything they could with both fists, and now retail's in the position that everybody else was in last time. But now everybody's kind of trying to get out sort
Okay,
of
Captain
together.
Buzzkill.
Okay.
Dude, why are
But
you
if
trying to
you
yuck my yum?
but anyway, despite that trend that is still occurring on top of the fact that they issued, 2 and 3 day settlement options on these big stocks, I mean, it looks like largely what I'm seeing is that people are sort of treating those shorter dated contracts the same way they do on the index. You sell vol to accrue cash and just take a shorter time frame. So you take a shorter time window of risk.
Yeah, I mean it makes sense.
You
And then
take
and then
on you take on gamma risk in exchange for less data, right? So
Right.
well, you
it's
take on it's gamma risk for not less theta necessarily, but more theta extraction, like faster theta extraction.
Yeah. Well, that's why when this blows up, it has to blow up like immediately.
Well, it
There's going
won't.
to be
That's
like a down 10% day, and then it's just everything just completely explodes. Otherwise,
like
there's just it's too over damped.
yeah. I that's pretty much I think you hit the nail on the head. There's going to be a ton of liquidity. It's going to be super deep. And then but the thing is the same thing that happened with Volmageddon 2.0 and Liberation Day and all those things. Once that appetite for risk sort of dries up, it's going to be so much more amplified because there's just such a hard concentration in that short end that the appetite for the long end just won't be there at that point. Right. And that structure is going to be so different than it is now that yeah, I think you're
Yeah.
right. It's going to be this weird ultra short term risk profile that is just but the thing is once that risk profile blows up, depending on how bad it is obviously, but once that risk profile blows up, it should have a pretty quick rebound, like a mean reversion of profit and
Unless,
loss.
well, right, but that's why one of the reasons why I think just even the last few days of trading have been so interesting, because we haven't recovered intraday, which means that those positions are blowing up. Whereas before it was always like, oh, it went down 1.5% somehow, and then it completely reversed and closed 0.01% up on the
The
day.
immaculate V.
Yeah.
Praise V.
That didn't happen last week for 2 days in a row. Right. And I think was it Friday, and maybe it didn't go down that much, but it didn't recover. Right.
yeah.
So everybody's
It was like a 1% swing on Friday.
I,
It's
I
crazy.
remember like about a week ago we were discussing well 2 weeks ago I guess we were discussing kind of VRP and how that affects where where put buyers or put sellers are incentivized to sell vol on indexes. And I will say that with what JFresh is saying, right, we are getting more realized volatility because we're not getting that flat close over close. And as long as realized volatility continues to climb in line with the increases in implied volatility, then nobody wants to sell puts. And the cheapest price you can buy them at was yesterday. So, you tend to get more of the market leaning into the downside when that happens because that realized volatility continues to keep tick up and that spread between IV and HV stays thin. And so until you can get some flat days locked in, some like real flat, like several day over day flat days, it's very hard for the market to stabilize once that starts happening.
yeah, and there's still a shot, but yeah. So the thing that I thought was really interesting was you had that big drop on Thursday that did not recover at all. It just went down all day, which
Mhm.
was really bad. If anybody had sold zero DTEs, they got screwed on the put side. Anybody that had sold 1 DTEs, which those happen too, they were hoping that they would get the bounce the next day, and they tried for it, and then that collapsed and it at least closed flat. But all of the
I would
1
argue that Friday was even worse because of that.
Yeah, well, Friday is worse because the people that didn't get screwed the day before, that were set to get screwed on Friday, that tried to recover it, also ended up getting screwed.
Yeah, that was the bad part of Friday. Is anybody who sold the open, probably, like, most of the people that sold the open and drove the bounce into the intraday got blown up by the end of day.
Yeah.
Which means
So you
that,
have
and
two these
that affects the one, like the Tuesday, because we have a holiday this week, but the Tuesday positioning as well, which will now be structurally weaker and more prone to, like, over the weekend increases in volatility than it would have been had we stabilized higher.
Yeah. And
Okay.
this is something we always see, right? Anytime we have a big down, it just like shoots up the next day, right? So you get like, and a lot of the down too happens in the overnight session. And a lot of the up happens in the overnight session. And so you have these 0 and 1 DTE positions that are still somewhat insulated from a lot of that behavior. And it wasn't until really Thursday and Friday of last week where I felt like, oh, this is different. This is
I still think
this is an outcome that was bad for them. It's not out of control yet, but it is gone a little bit farther than they normally allow it to.
yeah, I still think we stabilize into the start of this week and move up, because our close over close was fairly flat Friday.
Yeah. Yeah.
And so, and then, lack of event vol at the start of this week, and that eases the risk on the put sellers, at least in the short term. And we're probably overdue for some mean reversion back towards, like, delta neutral, gamma neutral.
Okay. So long story short, I think for our question asker here before we
Unless
traipsed
vol
off
picks up tonight when
with
futures
Bitcoin
No,
is
open.
down.
tomorrow. Oh, futures is open tomorrow.
Yeah, futures is going to be open. So if futures is like, if futures, if vol turns up in futures, then things will keep selling off. But if they don't and futures stabilizes into the Tuesday open, I think we get a bounce, or
Yeah,
just
that's fair.
open mean reverted.
So
Yeah.
Bitcoin's down 2.5% today as we talk. So that means that it's not looking great for NASDAQ futures because we know that they
Ooh.
are
Highly correlated.
highly correlated, but we'll see what happens after that. But
The
anyways,
same people making the same trade. Yeah.
yeah, exactly. So anyways, so to digress back to the question that was asked about short-term options on single stocks, I think that what we kind of come to a consensus on is that the dispersion trade is just going to get more front-loaded to the short term, leading to a lot of options depth in that short-term chain.
Yes.
But it could also lead to a lot of tail risk in the ultra short term as well, with a high degree of probability for mean reversion.
I mean,
However,
there'll be a lot of time spent prior to that testing strategies for that. I mean, there'll be strategies that are tested. There'll be strategies that come to the forefront. When zero DT options on the SPX came out, we didn't immediately get massive amounts of put selling. It built over time as people realized that that was the most favorable trade to take in that environment. And I think we'll see the same with equities. I would say let's revisit it in a year and
Mhm.
see where the market has settled, because there's a number of different outcomes, and like I can tell you right now, one of them would be, higher equity vol at lows versus higher at highs, and then more stair step style price action as the, like Dork said, like the near term options market gets overloaded, causing equities to trade flat except for news or repricing, which would then be very, very rapid due to so much of the upside of spot being sold.
Yep, I think that's fair.
Okay. Yeah, I dig that. So, final question, because I got to go through closing the duffel bag at some point. Comes from YouTube. It's another great question. Uh, feel like silver contains a lot of similar financial properties to gold in the sense that it's a pro metal hedge that should follow within lockstep to gold. What seems to be the antithesis that pushes gold more favorably? I think you guys touched on this the last podcast when I was sick, with your whole talk about gold as a hedge versus silver as a hedge, where JFresh, if I remember correctly, you affectionately called silver the AMC of precious metals.
Yes. Yeah, I
Yes.
did. Yeah.
Um,
But yeah.
Go ahead.
I was just going to say silver is the poor man's gold. It will never be gold. It will never it's the ugly cousin.
This is
It's also more of a commodity that is linked to solar panel production. I mean, it's by far the largest use case of gold.
silver.
And those people, sorry, of silver. Thank you. And nobody wants to pay, like, there's no room in that market to just drive up the price of solar panels. So there's not much pressure from its actual market. So silver is the speculative fart from the gold move.
Yeah, I
That's my opinion.
think you've no
Fart.
you've got the right idea, and I'm probably pretty well equipped to answer this simply in that gold is a recognized reserve asset. End of story. It is growth insensitive, and it is a monetary hedge. And if we think about what's driving repricing in gold and silver, which we've talked about now 101 times, it's, central banks buy it. And central banks that are disadvantaged globally due to, sanctions, uh, embargoes, etc. So, what would generally be considered geopolitically as bad actors really don't have access to the same very ultra deep liquid pools of gold that G7 central banks or G8 central banks would have. And so they will speculate in silver. And so silver does have some structural flows in this instance that do make it a bit more like gold. But it is not gold. Gold is infinitely recyclable. It's like crisis, like the flight in times of crisis or as a risk off asset. It is internationally recognized. There is nowhere you can take gold in the world and not immediately receive some sort of remuneration in the local currency. And silver, that can be a little bit harder. And so silver is less liquid. And then you also have a secondary effect on silver in that it is a high beta commodity, like JFresh was saying, and it is tied more into the industrial cycle and the amount of available silver. So it's far more impacted by supply deficits. Gold really isn't. I mean, gold is much more akin to a growth insensitive currency than it is to, a precious metal or commodity.
That makes sense. Yeah. Okay. I yeah, we've touched on this so much, but I think you kind of hit the nail on the head there that as a global standard for currency and inflation hedge, gold kind of just takes the cake and silver's just along for the ride.
Yeah.
Okay.
But
Well,
it is more, I will say, in this instance, it is more structurally backed than it normally is. And that is
okay.
because there are countries like Russia who own US assets, that have exposure to them, but have no effective way of participating in, like London metals markets. And so, they're, probably willing to buy up some real silver or start stockpiling the silver they already mine, in which case, silver starts to get a little bit of like a touch of that monetary surplus.
Okay. Okay, so it's picking up a little bit of steam then, and not just necessarily along for the ride, but kind of along for the ride, but being noticed.
Yeah, I mean, if there's a real shock, gold will outpace silver like crazy, because those markets are just deeper, and you don't have the same risks with converting paper to physical that you do with silver. People will want to avoid that. Everyone's like, oh man, everyone will want to squeeze silver, right, and like dry up the physical market, but nobody, no major investor wants that to happen to them. If they're buying paper silver, they want to get physical silver, and so they'll buy paper gold because they can get physical gold.
Right, right. Okay, it comes down to like talk about the market itself being deep, but then it comes down to the conversions themselves and the
Yeah.
delivery being as deep and being able to handle. Okay, that makes sense. Well, then in that case, it sounds kind of like talk about precious metals and making bets on those. Sounds like it's time for us to transition to our favorite time of the entire podcast.
Stupid bets, stupid bets. Who's gonna win? Who's gonna lose?
I see that you guys have made a bet on my chili recipe.
Yes.
Okay, so I just want to point out that I can clearly tell who has and has not been looking at pictures of my chili. First
I
off,
have not seen a picture of your chili. No, I don't go to the. Yeah.
honestly, I may make it when I see you, whenever that may be in the future.
Okay.
Um, but anyways, so why don't I, instead of just tell you guys who wins and who loses, how about I go over the chili recipe, because I know that there's a few people in the audience who want it. Okay. So
Okay.
first thing, 1/2 to 1 cup of chicken broth, a big can of crushed tomatoes. I want to
Is
say
that a
3 tablespoons.
32-ounce can?
Yeah, big old
Okay.
can. Yeah. And then 2 tablespoons, I think, of Tabasco.
Oh God.
Yeah, big old. Well, this is a lot of chili. You got the little packet of oregano, and you wrap it in cheesecloth. Um, and then you
Fresh.
got yeah, and then you've got 2 poblano peppers,
Ooh, nice.
diced finely. Then you have 1 or 2 serranos. I did 2 last time, or you can do a whole jalapeno, seeds and all. Um, and then you have the dry herbs, which I use like 3 or 4 tablespoons of whole cumin that I grind up in a mortar and pestle and throw in there. Um, and then a little bit of dried thyme. And you have 1 to 1.5 pounds of ground beef, but you could use whatever meat you want, really. Then let's move on. Next, we have 1 can of red kidney beans,
Oh,
1 can of black beans, 1
black
can
beans.
of pinto beans.
3. We all lost.
What? Wow.
Black beans?
Black beans, yes.
I love the kidney and pinto combo. Black is aggressive.
It is, and it's delicious.
Really? I'll have to
Yeah.
try it.
Yeah, so you
Don't they
obviously
just?
brown the meat.
I feel like the beans would degrade at varying degrees. Like the kidney, it's a strong bean. It doesn't
Yeah,
get
it
like
is.
you can stew that bitch for hours and it won't go anywhere. But
Yeah.
the black bean turns into mush after like
It's
20 minutes.
so the kidney beans are the bite component. The black beans are part of the overall chili texture component, and this thing doesn't require anything to
Oh.
thicken it, right? Like there's no thickening in this. So you just and there's also a yellow onion. So you basically you brown the meat, take it out, sweat the onions, and throw the peppers in, sweat them out a bit, and then you throw the meat back in, throw the beans in, and then you throw in the chicken stock, and I guess the Tabasco can go in at that point. Get your cheesecloth, oregano, throw it in there, and you just cook all that down for like an hour and just really get it to simmer down. And then at that point, you also have your dry herbs and spices. There's salt and pepper, obviously, that are thrown in there as well. But that's pretty much it.
Interesting.
Did you not? Did you? I don't remember you saying chili powder. Do you put chili powder in it?
Yeah, I'll throw chili powder in. Yeah,
Are we gonna have a
Why not?
GammaStrike chili cook-off?
chili con
I mean,
carnival.
I don't. I don't make good chili. I make like average chili.
I make
I would
average
never
chili.
I would never put it in a contest. I just no. That's not the purpose
Well,
of it.
hold
It's
on.
just to
No,
be a
no.
hearty.
It's like paper trading competitions, right? You just show up and don't trade, and you might win.
Yeah. Just don't make chili.
Yeah.
So, but
You
you
might win.
serve it
You
with.
actually would win because you would just get to eat other people's chilies.
That's true.
Yeah,
You're the
that
ultimate
sounds
winner.
great.
But yeah, and then you
All
serve it
right,
with
so we all
a
lost.
dollop
Dork puts
of sour
three
cream and cilantro, and then a pinch of lime.
3 beans. I don't know if that's more offensive or less offensive than 0 beans.
It's less offensive than 5 alarm chili from Ohio.
Oof. On or off of a hot dog?
Off a hot dog. I think 5 alarm is on spaghetti, which is the most disgusting way to eat chili.
I'm offended. Oh, good Lord.
You know what I'm going to
It
serve
somehow
at our
insults Texans, Mexicans, and Italians all at the same time.
you know what I'm going to serve at our chili contest?
5 alarm chili on
No.
spaghetti.
Manwich on bow ties.
Oh my God.
Okay, hold on. While we're on the topic of cooking, let's talk about the sloppy Joe. Never use manwich. It's disgusting. Just take ketchup and mustard and put it in a pan with ground beef and onions, and then just keep adding ketchup until you have a sauce.
Or just make pulled pork and then
I'm just gonna not do that. I'm not gonna eat that. I'm gonna eat something else.
or you just make pulled pork and make delicious sandwiches with a little bit of
The
barbecue
only reason
sauce.
I'm making this is so that the person who does nothing doesn't just automatically win.
Right. It has to be better than nothing. It's a pretty low bar.
Maybe the week we do this, that can be the stupid bet. Who wins the GammaStrike chili cook-off?
Oh shit.
The prize will be
we'll do
one
that.
Taco Bell quesadilla
I'm in it to win it.
with as many add-ons as the winner wants.
I'm committed.
Ooh, I like that.
I like how
Little
I
bit of
pointed up with
lettuce.
my finger and now my camera just zoomed right into my face.
And
You gotta
little bit
do
of
that thing.
olives. Little bit of lettuce.
What the fuck? There is no instruction manual for this.
All right. So what's our bet
so what's
this
the new
week?
one? Yeah.
I don't know. Do we want
Bitcoin over under 70?
No, that's boring. Do you want to bet on the FOMC minutes?
What about them?
I want
Like
to
they're
say
going to change some language.
like what they're going to say.
We have to pick a phrase that they always say and see if they change it. That's going to take too much work.
We remain data dependent.
Our
I just want to see the word.
Listen to us.
I just want to see the word
FOMC
recession creep back into FOMC minutes.
Then my stupid bet is the word transitory.
Ooh.
So it's just
If
a
yours
word
is
you want to see in
recession,
there?
mine's transitory.
Mine's stagflation then.
Okay. All right. Well, there's our stupid bet.
I actually kind of love this stupid bet.
This is amazing.
We really brought it together at the end.
Beautiful.
All right.
Well, shit, guys.
Well, with
It's been
that
fun.
done, Ron, take us out.